Good morning, everybody. Welcome to today's morning blast. It is 7th of January. What day is it? It is Wednesday. You join myself and Mr. Michael Brown for the morning blast, where, as usual, we go through what's happened in markets. We have a bit of a rant. We are embracing our new format, where we then talk about get our heads together and have a bit of a chat about anything that we can think of to do with markets. We think will add a bit of value and hopefully put a smile on your face. Usual caveats apply. Pardon me. Usual caveats apply. This is recorded live. There's no editing or anything like that going on, so none of that bollocks. So speaking of bollocks, trigger warnings do apply. This does carry expletive warnings on the podcast because we can't stop swearing. Yeah, just hope to put a bit of value in your day, put a smile on your face. Nothing we say is investment or trading advice, etc., etc. Michael, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. I think it's safe to say the odds on me adding any value this morning are very, very long indeed.
Well, I didn't want to drop you in it, but what time was it? Let's have a quick look. It was 9:30 last night. I'm 9 beers. I'm 9 Guinnesses deep.
Yeah, I think there were a couple more after that as well, worryingly. So.
As not that I've been talking about you behind your back, but as our dear friend Tom has suggested to me, this kicked off with you being back in the office for only 1.5 days.
Yeah, and it was also only meant to be one quick point at lunchtime as well.
This is how they get you. I've created a monster.
I was reeled in. I was badly influenced. It's not my fault. Well, yeah, exactly. That's the worst bit.
For once, it wasn't me. Yeah, so I'm sitting here, half with me coffee, with me Ian mug, loving life. But anyway.
Well, I've had 3 coffees so far and I don't feel any better. So there we are.
I'm so happy. Right, before we crack on, do you want to give an update on what happened yesterday?
No, not really.
Okay. I'll say what happened yesterday. What happened for the couple of hours you were in front of the screen?
Well, actually, no. There are a couple of things I want to talk about before we get on to our debating points, which we'll come to momentarily.
You could say we're having a mass debate.
Oh, God. Moving quickly on from that. The first is that equities continuing to gain... Oh, Jesus. Jesus Christ. Equities continuing to gain ground. The S&P closing at a record high yesterday. The tech sector continuing to outperform. The Nasdaq up by almost 1% on the day. And we saw continued strength coming through in the precious metals complex as well, with gold back at $4,500 an ounce. And also overnight, we saw silver trading north of $80 an ounce once more, although we have seen silver start to lose a little bit of its luster in early London trade, with us down by about 2% or so this morning. The other bits and bobs I just wanted to mention very briefly in terms of yesterday is we did have some inflation figures out of the eurozone. I mentioned on the podcast yesterday morning that French inflation came in at a 7-month low. We also had a big downside surprise in the German CPI metric, which came in at 1.8% on a year-on-year basis in December, down from the 2.3% that we saw in November. The reason I bring this up is because we're seeing, well, of course, this comes ahead of the Eurozone-wide figures that we get later on today, but we're seeing Eurozone inflation come in cooler than the market had expected before the bulk of this disinflationary base effect from energy prices, which is going to be felt most significantly in February and March of this year. So that potentially at the margin tilts the balance of risks further towards the ECB possibly having to deliver another 1 or 2 rate reductions. Money markets at this moment in time pricing just 4 basis points of easing by the end of this year. So potentially room for a pretty significant repricing if we do see that inflation data coming in on the cool side.
Go on. Just on that quickly.
I can have some water.
Yeah, go on, go for it. Have a little sick up in the bucket.
Oh, God.
Someone's just WhatsApped me saying he sounds absolutely fucked, and I've never been happier to read that message.
Please tell me who that was.
I can't. I'll give you a clue. He buys lots of brown onions in Marks and Spencer's.
Fuck off back to Thailand.
Very much inside joke there, but anyway, moving swiftly on. Anyway, my serious question. Theories, thoughts on what's behind this. Is this... Yeah, I know. Funny enough, I mentioned it 2 days ago on a tweet to you about potentially like China exporting deflation, or is it more just a function of lack of demand? People tightening their belts. Obviously, we saw retail sales drop in Germany this morning.
Yeah, I'm sorry. I thought you were going to say something else. Then, I think it's the latter primarily.
Yeah, I do.
I don't really buy this sort of exporting deflation argument. I think it really is a reflection of just how the eurozone economy is still pretty anemic. I guess the question is, are the ECB happy to tolerate a relatively modest inflation undershoot? Obviously, the projections I think are 1.8% this year, 1.9% next year, and then back to 2% in 2028. At what point do the doves on the governing council say, actually, we think we do now need to do more in terms of moving rates below that 2% mark where they currently are, which you'd say is basically a neutral rate for the eurozone.
And just for anyone that was wondering, when I said about the retail sales numbers in Germany, they came out month on month this morning. The month on month figure this morning was expected to be a rise of 0.2% on the retail sales for November, obviously. And it came in at minus 0.6. So not just a miss, but probably below the worst expectations. If I'm trying to remember what distributions are normally like on those ones.
Yeah, I mean, utterly grim, to be honest with you. I don't think there's any way to frame that in an optimistic light. Moving on from that, the other thing I just wanted to mention very briefly from yesterday in terms of geopolitical events, there's a few bits and bobs that are going on. I won't profess to be an expert in any of them, unlike the people you'll find on Twitter. There's plenty of those out there. The first is President Trump yesterday was saying that Venezuela is going to, his words, turn over between 30 and 50 million barrels of sanctioned crude oil to the United States. He said it's high quality sanctioned oil. We all know that Venezuelan crude is not high quality, as we discussed earlier on in the week. He then said that oil will be sold at its market price, which is very low. I think you put out something yesterday saying that Venezuelan crude sells at $40 a barrel or something.
Yeah, I'm glad you mentioned that, because there's a couple of points I want to raise on that. Very quick points before we crack on with ADP versus NFP, but carry on.
Well, I was going to say, just lastly, he said that money will then be controlled by him as president of the US, which will be used to benefit the people of Venezuela and the United States. So I'm not entirely sure what's going to happen with that one, but actually those oil cargoes are already being loaded and are on their way to the United States. So keep an eye on.
Couple of things with that. Again, no one likes context and no one likes a bit of grounding, as I put on a tweet today. I got to say, just off topic slightly, news twit / FinTwit the quality has never been poorer, in my opinion. It's all the creative content payouts and stuff like that. It's just everyone's going for fucking viral tweets and stuff and no one's really caring about facts. But for what it's worth, on paper, and many people are getting frothy knickers about 30 million to 50 million barrels of crude. When you kind of take a step back and say, okay, well, what does that equate to? That's about 10 hours worth of global demand.
Yeah, it's not a lot, is it?
It's also, no, exactly. It's also not great crude oil. Like you said, it's sludgy. Also, saying, flipping a switch and saying, send all the boats over to US refineries, it doesn't quite work like that. It's not as easy as to say. But also, as Rory Johnson, who is a great person to follow regarding oil markets, as Rory Johnson notes, this is most likely represents just all the barrels of oil that have been building up during the blockade, both in rusting ships, so like on seas, like kind of on water storage, and also rusting domestic tanks. So basically, they need to get rid of this oil to alleviate the pressure that's building up and then shutting in upstream production. So if you think about it just very quickly, it comes out the ground, it's got to go somewhere. Now, if you already filled up all your storage areas, you can't bring any more out the ground. So it really clogs up the whole supply chain. And the problem with thick, heavy crude, like Venezuelan or Orinoco crude, if that pipe stops flowing, it can very easily clog up and irreversibly clog up. So they do need to keep the oil flowing. So, take a pinch, it's not the oil grab that everyone's making out. It's almost a function of the supply chain that needs to happen anyway.
Yeah, and I think the other thing is, obviously Trump is going to run around saying, this is the greatest and the biggest and the most beautiful amount of oil anyone's ever seen. But again, just take the hyperbole, take the spin out of it. Is it a game changer in the grand scheme of things? No, not really. No. Does it mean that Venezuelan output is suddenly going to come back onto the global market? No, absolutely not. Primarily as a result of everything that we discussed on Monday. And if you've got no idea what we spoke about, go back and listen to the show because we covered it in quite some depth. Just two other very quick geopolitical lines I did want to mention.
Cool.
Firstly, sort of tied to Venezuela, and again, I'm really not an expert on this, but there's a lot of chatter on social media and also in the Wall Street Journal. There is a Russian-flagged crude tanker, which is causing a lot of interest at this moment in time. It left Iran about 7 months ago, was on its way to Venezuela, then it turned round from Venezuela and now looks to be heading back towards Russia. The US Coast Guard has been following this vessel, which is now in waters just off of the Republic of Ireland. I believe it's going up sort of between Iceland and the UK and then over to Russia.
It's going up to pick up all that Guinness you've been drinking.
Well, it could well be doing so. The reason why I think this is interesting is because there's a lot of talk as to whether the US may try and seize this vessel, firstly. There's been a lot of military movements in terms of helicopters and all the rest of it that are now staged here in the UK. And as I said, you've got the Coast Guard following them. But there seems to be something slightly more at play, because there's now reports that Russia have sent not only a Navy vessel, but also a submarine to follow this vessel and escort it safely back to Russia. Now, I'm not going to go down all the sort of conspiracy theory rabbit hole, but yeah, do you really send a nuclear submarine to shadow a rusty old tanker full of some crude oil?
So on this, again, well, we do want to get onto the ADP, NFP debate, but just on this, yeah, obviously it was a Venezuelan tanker or wherever it was, but then it got reflagged during the sea, whilst it was out in the ocean. Now, there is an argument, and this taper expectations, there is an argument that Russia just want to say, look, we've had a bit, our boys have taken a bit of a kicking with Maduro going. We want to save some face. If we can't project protection over our own vessel in the middle of the ocean, then what the fuck are we doing with ourselves? So there's an element, there's an argument to be made that they're doing this just to prove that they can protect a boat that is theirs. But as you say, from the sounds of it, it's the 106th SAW Battalion or whatever they're called, who are over in, I think, RAF Midenhall at the moment, or wherever it is in the UK.
Yeah, they're the same lot that went into Venezuela.
I mean, that's a hell of a projection of power if Trump does Maduro and then this oil tanker, even though it's got all these things around it. But again, I think it's one of those issues that, does it impact markets? Not really at the moment. Is it a potential flashpoint that could then matter? Yeah, potentially. So it's something to have on the pun radar.
Yeah, no, absolutely. It's one of those where, it doesn't matter until it does matter, which obviously sounds ridiculous, but it just sort of bubbles away. And then at some point it could become this big flash issue. So certainly worth keeping on the radar.
And just what we mean by that is Trump taking this tanker to the markets means absolutely bugger all to markets. Trump taking this tanker should have zero impact on markets. However, right? So you could say, well, traders shouldn't even bother caring about it. However, if something goes wrong, or say something happens and the wrong thing gets shot or something like that, then all of a sudden it's a global incident, and then it really does matter to markets.
Yeah, absolutely. I think that's
have one eye on it.
That's the right way to look at it. It's one of those situations or incidents where the risk of a miscalculation, accidental miscalculation, is very, very high. That could then spiral into something much, much more significant that then market participants do need to worry about.
Yeah, no, exactly that. Right.
That was it. Yeah, I was going to say, we can do ADP versus NFP. I must admit, I think I overestimated my debating abilities when I suggested this topic a couple of hours ago.
Well, I'm glad, because it's what we're going to chat. We're going to have a quick chat. This is Michael's suggestion. Bearing in mind it's ADP today, ADP numbers, and we all know that I love ADP compared to NFP. So Michael said, let's have a little bit of a chat. And what I will do is I will put it all up in a blog post as well, so we can go in a bit deeper dive. But I'll set the scene. So obviously, as we know, there's two types of employment reports that come out every month from the US, 2 days apart. You've got ADP on a Wednesday, today, and you've got NFP on the first Friday of the month. Market obsesses over NFP, but I've been making this argument for quite some time, and I am a broken record, and people get annoyed with me at the best of times, let alone when I go on about this. But I make the argument that ADP actually makes much better sense. Not only does NFP get revised down by nearly millions of jobs, well, it got only just revised down to nearly 1 million jobs again, but I think it really is time that we need to rethink it. So before we crack on, and I almost willing to bet the majority of people that look at NFP don't actually know how it's created. Now, just to give you an idea, ADP, this is based on the payroll data, ADP payroll data. It's based on actual real payroll transactions. It's money actually going through into people's bank accounts. They've got 25 million US employees are being tracked. Around 460,000 companies are being tracked. And it's private sector, right? And ADP is a company. It's in their interest to be accurate. Okay? That sounds like how anyone should be judging jobs numbers, right? That makes perfect sense. Now, what most people probably don't realize is NFP surveys about 120,000 businesses, and they got to hope that they all reply, plus household surveys of about 60,000 households. Again, they got to hope that they can get that many to reply to those surveys. They don't take actual data. They still, like I say, it's just survey data. And they use statistical modeling for business births and deaths. So how many businesses should be being created? How many are dying? It includes government jobs, and it's subject to a shitload of revisions. Now, the important thing here, before you crack on and tell me why I'm wrong, the crucial thing here is that NFP is really shit, especially in the turning points of the economy. Because if I'm setting up a business and then I'm hiring people, that doesn't count into NFP data because the company that I'm setting up isn't up and running yet and on the survey and not being surveyed. And same for if I'm dropping people off. Yeah, when you break down how NFP works, and if you have a proper look into how it's put together, it is shocking. What are your thoughts?
Right, you off your high horse?
I am.
Off your little Shetland pony.
Can you tell I've been waiting to say this for quite some time?
Yeah, worryingly, I can. Yeah, I think there's a few things I would struggle to say with that if I can get through this. The first is I think actually it's important just on a broader level to, there is no one indicator that's just going to tell us everything you need to know about the state of the US labour market. And actually that's the same if you look at the UK labour market or anywhere. The reason we focus on NFP is because of the market impact that it has. And actually even that market impact now is considerably less than, it's probably the most minimal I can remember in the last 10 years or so, and probably even further back. Payrolls is not the sort of big market mover that it used to be. I think there's a few reasons why I am inclined to place more weights on the official BLS numbers than on the ADP report. The first is that the sample size, as Ryan alluded to, yes, the BLS are going out and doing those surveys and doing that field work, whether it be for the establishment or for the household survey, but the sample is considerably larger than that which is used for the ADP number. So if they do their job correctly, and if you get a decent survey response rate, you should be getting a more accurate figure. One of the other reasons why I prefer the BLS report is the ADP, going back to that methodology point, they are suspiciously coy and quiet as to the actual methodology that they use, which they've never actually released. And they did change this, remember, back in 2021, 2022, I believe it was. They paused publication, redid the whole methodology, and then went, here's the new numbers, but didn't actually tell us what that methodology is, which makes you question, to some extent, what they're actually up to.
Counterpoint. That's their secret sauce, right? They're a private company and they want to protect, one of their IPs.
Well, no, I mean that is fair enough, but as from an economic perspective, you then go, well, actually, I'd quite like to know what's going on under the surface. The other thing that I think it's worth bearing in mind is, and this is not as much of a problem at this moment in time because obviously we've got a federal hiring freeze, but ADP is only the private sector in terms of payroll. So again, it doesn't include government jobs, it doesn't include state government jobs, local government jobs, etc., which means you're probably not getting as comprehensive a picture. But having said all of that, I think it's, as I said a moment ago, you're not going to get just one indicator that tells you everything about the jobs market. And the second is that even though I prefer the NFP data, that has its own issues because, of course, you've got to really...
I'm sorry. Right. First, I'm going to quickly interrupt here, right? Firstly, right, I would, if we're using the jobs data for a gauge on the economy, which is ultimately what we're doing, right? I would prefer it not to include government jobs because the government getting bloated produces higher numbers of employment numbers on the NFP. That's not a sign of a strengthening economy. That's a sign of a bloated government, which in fact, I would argue, has the opposite effect to the underlying economy, right? I would rather it did stick to private data, private company data, because that is the economy at the end of the day. And secondly, I've already forgot your second point. What was your second point?
I don't know. I think it was about sample sizes, wasn't it?
No, I can't remember what it was. Okay, right, Carol. But anyway, my point about I would rather it be private companies' stands. I would rather just know what the private sector is doing. That's mine.
Fair enough. Should we move on?
Yeah, if you want to. We've got
Because I want to talk about tariffs briefly.
Go on, go on. Yeah, so you want to do quick tariffs, right? So
yeah.
So just quickly, so I can set the scene. So SCOTUS tariff ruling is happening Friday, perhaps. Basically, Supreme Court might rule on Friday whether Trump's tariffs are legal. Not all tariffs. These are specifically the ones he imposed using the 1977 Monetary Powers Law called the IEEPA. But this does cover the Liberation Day tariffs, which obviously, if everyone can remember, that's April 2025. Basically the big ones, and the fentanyl tariffs. So that's what's happening on Friday, but it's not as clear cut as everyone thinks, no matter what the outcome is. So Michael, over to you.
No, and actually the first thing to say is it might be happening on Friday. The way that the Supreme Court in the United States works is they set a date on which they will announce rulings on cases that they've heard. And they say, we will make some rulings on Friday at 10 a.m. Eastern time, as they've done here. But they don't actually say in advance which cases they're going to rule on. So everyone has kind of put two and two together and gone, well, you heard oral arguments last year. You said you're going to expedite it. This is the first rulings you issue of the new year. It must be a ruling on the tariff case. It could be that actually that ruling doesn't come on Friday, but the expectation is that that might come. And I think there's two key questions that market participants will be focused on here. And I'll preface all of this by saying I am not a legal scholar in any way. The first of those questions is simply, are these IEEPA tariffs legal or not? Has Trump got the authority to impose tariffs under this Emergency Powers Act, or does he not? That is question one. The second question, and again, we may or may not get a ruling on both of these at the back end of the week, is if those tariffs are ruled as illegal, will the US have to refund those levies that they have already collected, the 30-odd billion a month that they've collected since April? There is also, of course, then going to be question marks over the quote-unquote trade deals that have been agreed. Think about, 10% with the UK, 15% with Europe, Japan, all these investments, all the rest of it. Are those deals still valid, and do they still count for as much as they currently do if the IEEPA tariffs are ruled as illegal? I think the big sort of market risk on the ruling itself is on the issue of refunds. Yeah. Because obviously if the US were to have to pay, $30 billion a month times 7 or whatever the number is, a few hundred billion that they may have to pay in terms of refunds, where are they going to get that cash from? Well, they're obviously going to borrow it. They would likely have to ramp up treasury issuance. So you'd be looking at significant downside risks in the treasury complex, higher yields effectively, as a result of that ruling, even when it's handed down at the back end of the week.
Can I just do a great quote that the Trump government has already put out regarding the refunds? Obviously, again, there's going to be challenges, legal challenges and whatnot, and there's other ways around it. But in terms of the refund chaos angle, the Trump government have already come out and said issuing refunds would be, quote, administratively burdensome. Basically, please don't make us do it because we haven't got a fucking clue how we can refund people.
Well, I think that there's also a question as to, and we're going off a bit of a tangent here, but who would you actually refund? Because the Trump administration have spent the last year or so saying, well, it's actually the countries exporting the goods that pays the tariffs, whereas we all actually know it's not. It's the company importing the goods. So there is a question as to who those refunds would actually go to. But again, that can be dealt with in time. I think from a broader perspective, as you alluded to right at the start, there are other sections of commerce law that will enable the Trump administration to reimpose basically the same tariffs. And you would fully expect that someone in the NEC has spent a few months working on basically a backup plan that would be ready to go essentially as soon as the ruling is handed down in that case. So the overall tariff rate shouldn't really change. No matter what this ruling is, it's just the legal mechanisms via which those tariffs are being implemented.
But just a couple of things as well before I know we want to also just quickly crack on with what's coming today. But I think it's been two very good chats. Just one thing to note, in terms of Trump's response so far, he's called it potential loss. He's called it a terrible blow to national security. He's also claimed the US would become a third world country if he's forced to fund people. Apparently, they're going to have to pay back trillions of dollars. Okay. And he said to the GOP yesterday, hope they do the right thing. The president has been able to wheel and deal with tariffs, has to be able to wheel and deal with tariffs. One thing I thought was quite interesting, it just shows you capitalism always finds a way. hedge funds are already taking this risk off of importers at like a steep discount. It's like, X cents to the dollar, and say, look, we'll wear it, but you owe us for some insurance, basically. So a little secondary market's already popped up.
You know who the biggest player in that market is, don't you?
Go on.
Cantor Fitzgerald.
Are they?
Yeah.
Go on,
you know who founded or ran Cantor for years?
Good. Oh, it makes perfect sense.
Happens to now be the commerce secretary, and his son is still running the firm.
Honestly.
Yeah, I'm not making that up.
That is bloody brilliant.
So yeah, that's one to watch for Friday.
Talk about being hedged. Right. Okay. Awesome. Well, that was two really good topics I think we covered today. Right. What's going on today?
Yeah, just quickly, in terms of the day ahead then, at 10 o'clock this morning, in about an hour's time, we get the latest inflation numbers out of the eurozone. Headline CPI is seen at 2% on a year-on-year basis in December, while core inflation is seen at 2.4% year-on-year. Of course, as we spoke about earlier on, risks to those figures are probably skewed to the downside, given the cooler than expected regional data that we had yesterday. And then across the pond into the afternoon, we've got quite a lot of US data, as we were just discussing. We do, of course, have the ADP employment figures at 1:15. That's expected to show private sector employment having risen by 50,000 in December compared to the 32,000 decline that we saw in November. And then at 3 o'clock this afternoon, we get a bit of a deluge of data out of the States. Actually, we get the December ISM services survey. The PMI there seen at 52.2, marginally lower than the 52.6 that we saw in November. We also get the November JOLTS job openings data, which is set to show 7.65 million openings, marginally below the 7.67 that we saw in October. And then also at 3 o'clock, we get the very, very stale October factory orders report. This has, of course, been it's been much delayed as a result of the government shutdown, but that is expected to show orders having fallen by 1.2% 3 months ago. So I really don't think that that's going to be on anyone's minds. Other than that, we're due to hear from the Fed's Bowman and the ECB's Pereira as we move into the evening. Overnight, we get cash earnings data out of Japan. The reason I mention that is because, of course, the BOJ are looking for this virtuous cycle, as they're calling it, of higher prices or higher inflation and real earnings growth along with that. So that data could be key in determining the timing of the next BOJ hike. And on the earnings front, of course, Q4 earnings season gets underway next Tuesday. But we do hear from Jefferies, who report after the close this evening, and there could potentially be some read across from Jefferies into some of the other banking names like JP Morgan and Morgan Stanley, who will report next week. And of course, in addition to that, participants will continue to follow geopolitical events very, very closely indeed.
Wonderful. Michael, we've done this with a couple of minutes to spare. Do you know any good jokes? Oh, I've got a new blue joke.
No.
As in the colour blue. Everyone knows my favourite blue joke, but I won't.
It doesn't involve a coat, does it?
No, it doesn't.
Oh, right.
What's blue and not very heavy?
Oh, God.
Light blue. Way! Right, on that bombshell, everyone.
I'm going to go and lie down somewhere.
Right, wish you a great day in front of the markets if you're trading or if you're doing whatever. Just have a great day, really. Stay out of trouble. Don't do anything that me and Michael wouldn't do. Don't try and sink 9 pints of Guinness. Don't be a hero like Michael Brown.
Don't go for a quick one at lunchtime.
Don't go for a quick one that turns into a long one. Whatever you're doing, stay safe, keep it tight. Hope you're enjoying the new format, etc., etc. And we'll see you all tomorrow.